Now we will take up accounting equation approach. So as we have seen earlier, generalization of entries is the first process of accounting, and for that we have to keep certain principles in mind. So generalization can be done based on two different approaches. One is called the accounting equation approach, second is called the traditional approach. In the case of traditional approach, we have seen as to how the rules need to be followed in deciding which account to debit, which account to credit. They are called the Gödel rules of accounting. Now let us try to understand the other approach called the accounting equation approach. So as per this approach, each transaction recorded in the books affects the assets or liabilities or capital. So as we have seen in the balance sheet, we have assets on one side and liabilities and capital on the other side. So anything we do which is recorded in the books affects one of the three in such a way that the accounting equation holds good at all points of time. So what is the accounting equation? Accounting equation is nothing but assets is equal to liabilities plus capital, or it can be put in other way saying assets minus liabilities equal to capital. So this is called the accounting equation. So we have to ensure that this holds good in respect of all situations. So if there is an increase in assets, then there has to be an increase on the right hand side also. That is, there must be an increase in liabilities and or capital. Or if there is a decrease in assets, similarly the right hand side has to go up. Or if there is an increase in assets, then there has to be a corresponding decrease in assets, so that the left hand side remains the same and there is no need for a change in the right hand side. Or alternatively, there could be increase in liabilities and decrease in liabilities and or capital simultaneously, so that the right hand side remains the same, and therefore there is no need to change the left hand side of the equation. So this also has to be kept in mind. So in order to find out as to how this can be verified, we will have some illustrations. We will take some generalization of entries which we have done earlier and try to find out how recording those transactions in the books will take care of the accounting equation. So let us start with the following illustration. So there we have seen, we have given 9 transactions. First is purchase goods for cash for rupees 400. So this, as we know, is purchases account is debited and the cash account is credited with the amount. So now let us try to find out as to what happens to the accounting equation. So when we cash purchases are done, that means cash balance will go down, that means assets are going down. So therefore there is a decrease in assets to the extent of 400, and what happens in that case, purchases are going up, which means expenses are going up, which means net profit is going down, which also means capital is going down. Therefore there is a decrease in capital to that extent. Therefore the equation holds good. So there is decrease on the left hand side, that is the asset side, and a simultaneous decrease in the capital, that is the right hand side. So second example, there we have capital brought in the form of cash. So cash account is debited with 10,000 rupees, capital account is credited with 10,000 rupees. So here what has happened? Assets have gone up, that means cash balance has gone up by 10,000 rupees, capital also has gone up by 10,000 rupees. So the accounting equation holds good. The left hand side and the right hand side have both gone up by the same amount. The third example, where money has been deposited in the bank. So bank account is debited with 5,000 rupees and cash account is credited with 5,000 rupees. Here assets have gone up in the form of bank balance, and simultaneously another asset in the form of cash has gone down. So there is an increase of one asset and a decrease of another asset. So they cancel each other. Therefore there is no change in the left hand side of the equation. Therefore there is no need for any change on the right hand side of the equation. So example 4, if we take furniture bought for cash. So we have debited the furniture account with 2,000 rupees and cash account has been credited with 2,000 rupees. So here what has increased? Assets in the form of furniture have gone up by 2,000 rupees, whereas assets in the form of cash have gone down by 2,000 rupees. Therefore the left hand side does not change at all, because one increase in one asset is compensated by decrease in another asset, and therefore, there is no need to change the right hand side of the equation. And then next example, sales effected by cash. So, cash account is debited with 500 rupees, sales account is credited with 500 rupees. So, here what has happened is cash asset has gone up, that means there is an increase in cash of 500 rupees and there is increase in capital of 500 rupees. This is because sales are an income. So, income always adds to the capital of the entity. Therefore, increase in sales income means increase in capital. So, the left hand side also has gone up by 500 rupees, right hand side also has gone up by 500 rupees. Then example 6, you see their sales effected to Y on credit. So, Y's account is being debited, that means this is the amount which has to be recovered from Y at a later point of time. It is also known as debtors or receivables, and sales account is credited with 500 rupees. So, what has happened here is increase in assets is there, receivable is an asset, is a part of the current assets. So, that has gone up by 500 rupees, whereas capital has gone up by 500 rupees, because sales account means increase in profit and consequently increase in the capital of the entity. Then example number 7, here goods are purchased on credit. So, we have debited purchases account and credited Jaid's account from whom the purchases have been made on credit. So, what has happened here is decrease in capital to the extent of 500 rupees. So, why decrease in capital? Because purchases is an expenditure which will go to reduce the net profit, which will eventually reduce the capital of the entity. So, therefore, decrease in capital of 500 rupees and increase in liability of 500 rupees, because Jaid is a liability, is a sundry creditor. This money has to be paid to him at a later date. So, there is decrease in capital and increase in liability. That means one decrease on the right hand side is compensated by a similar decrease on the right hand side only. So, therefore, there is no need for the change on the left hand side of the equation. Then example 8, where rent has been paid for a particular month. So, rent account is debited with 500 and cash account is credited with 500 rupees. So, there is a decrease in the assets in the form of cash by 500 rupees and decrease also in capital in the form of 500 rupees, because rent is an expenditure which will go to reduce the net profit, which will consequently reduce the capital. Therefore, the right hand side and the left hand side both have gone down by 500, which means the equation holds good. And finally, the last example is salary paid for a particular month. Salary account is debited with 500 rupees and cash account is credited with 500 rupees. So, cash has gone down, therefore, there is a decrease in assets of 500 rupees and capital has also gone down, because salary is an expenditure which will reduce the net profit and consequently the capital. Therefore, one side has gone down by 500 rupees, another side also has gone down by 500 rupees. Consequently, the accounting equation holds good. Therefore, in order to ensure that the accounting equation is kept at all points of time intact, we have to pass entries keeping this in mind.